This is a lecture from OpenTuition.
Okay, so we've capitalised our intangible asset at cost plus the directly attributable costs. We've then amortised that asset over its useful life. The question now is, can it be revalued? The answer effectively is, well, the answer is yes, but no. What do we mean by that? Well, the rules say that we can revalue your intangible, but we can only revalue it under very strict circumstances. We can't just bring in some revaluation expert and say, right, you've got your brand, you've got your license, you can go through there, you've capitalised it at cost, this is its now carrying value. I think based upon, say, future cash flows, that the value of your brand is worth however much they decide to charge you. If you can look at Microsoft, you can look at Nike, you can look at Adidas, Apple. Now, how much are those brands worth? We don't really know. We can make a good guess, but we're never going to know the actual value of that brand. So even though we're allowed to revalue intangibles per the standard, effectively we're not. So it's very, very rare to see us be able to revalue an intangible. Why is that? Well, what we need to see is this word, an active market. So in order to be able to revalue the intangible to fair value, there needs to exist an active market. Now that's whereby things are traded, but what is traded is identical. So they're exactly the same as each other. There's no subtle variations, and because they're regularly traded and they are identical, they generate a price that we can then use to be able to generate that fair value. It's a much more accurate, if you like, fair value, because that is what the market is dictating. So what you tend to see in reality are things such as production quotas or fishing licenses, because they are identical. You'll be granted a license if you pay to fish in a particular area of the sea or the ocean, of which you're then allowed to go through and take out however many fish it may be. Similar things would be milk quotas, or also as well taxi licenses, because again you've got the right to be able to operate in a predetermined area within a city, and therefore those licenses will be identical. People will be buying and selling them on a regular basis, therefore you can determine what is a fair value. So when you're looking at this within the exam, the likelihood is you're not going to be able to revalue, even though you are given a fair value. That's meant to sort of like set triggers off and think, oh yeah, fair value, we can revalue to fair value. No, you can't. Unless there is an active market. It's as simple as that. In reality, you will go through in the real world and see intangibles that you can go through and revalue. And if you do, it's very, very, very straightforward in terms of what you do, because it mirrors what you have effectively with regards to property, plant and equipment, in that we revalue to fair value and your gain would go to other comprehensive income in exactly the same fashion as it would with the revaluation of property, plant and equipment. And then once you've revalued to fair value, then amortize it over the remaining useful life. So again, with PPE, we revalue to fair value, gain goes to OCI, we then depreciate over the remaining useful life. Again, if you wanted to, you could potentially go through there and do your revaluation transfer within that statement of changes in equity. So just keep an eye out for these scenarios within the exam. Most of the time, you're not going to be able to revalue that asset because there isn't an active market. So therefore, just carry on treating it as has been treated in the past, i.e. carry on amortizing it over its life. There we go. Brilliant. So what we'll do, take a short break. We'll come back in a moment and then you can go through and we'll work the next example together. See you all shortly.